Hello everyone and welcome back to these sessions on financial statement analysis for CFA Level 1. Now, in the previous class, we have already started our discussion on impairment of assets. How is impairment of assets measured and accounted for under IFRS and under US GAAP, we have learnt. Now, what calls for is an additional practice of calculative examples, and this class is just devoted for that. So let's begin with the calculative examples over here straight away, and we begin with question number 1. Let us read this question. On 31st December 2024, X Limited had an asset with the carrying amount of rupees 20,48,000. There were indications of impairment for this asset. Therefore, X Limited has placed this asset for test of impairment. Following facts were gathered during the test of impairment. Remaining life 5 years. Expected annual cash flow rupees 5,20,000. Expected scrap value at end of life is nil. Estimated selling price on disposal at present is rupees 17,38,000. Applicable discounting rate is 15% per annum. You are required to determine the amount of impairment loss, if any, as on 31st December 2024. Now here, the question doesn't mention whether it has to be approached through IFRS or the US GAAPs. When nothing given, we will go with IFRS. So, application of IFRS will require the comparison between the carrying amount and the recoverable amount. Now, because there were indications of impairment for this asset and the asset has been put for test of impairment already, and we already know what is the carrying amount on the impairment testing date. The carrying amount is rupees 20,48,000. Now we need to find the recoverable amount. As per IFRS, the recoverable amount of any asset is its value in use or the fair value less cost to sell, which we can also refer to as net selling price. So, fair value less cost to sell, when you compare with the value in use, whichever is higher will become the recoverable amount. And if carrying amount exceeds the recoverable amount, then the asset is definitely impaired and you need to bring down the carrying amount to the extent of its recoverable amount, and that reduction, of course, if the asset is impaired, that reduction will be treated as impairment loss. So, theoretically you have learned it, but the good feel of understanding comes only when you are dealing with calculative examples. So, let's begin with the understanding of this. So, we are already knowing what is the carrying amount. Sometimes in examples they may not reveal the carrying amount directly. They may give you the historical value of the original cost of the asset acquired some years back. From that date, you have to subtract all the accumulated depreciation and accumulated impairment losses in the past, if any, to arrive at the carrying amount. You know that. Then you will be getting the carrying amount as on the reporting date or the date of impairment testing. But here we already have that carrying amount. Now to compute recoverable amount, as I already mentioned, you are going to take the higher of the two values. Which two values? The value in use and the net selling price. Now if you closely observe, estimated selling price on disposal at present is given as rupees 17,38,000. One thing is for sure, that there is no cost given for disposal of this asset. This can be treated as the net selling price, or you can call it as fair value less cost of disposal. However, this needs to be compared with the value in use. And what is value in use? It is the present value of all the future cash flows discounted using an appropriate discounting rate, and those future cash flows are cash flows generated out of the use of the asset, including the cash flows arising on scrapping the asset. So scrap value of the asset is given as nil, and every year this asset can generate cash flows of 5,20,000. So you can easily put these calculations on your financial calculator and arrive at the present value of these cash flows. That is no big task. Let us deal with the solution now. So in the solution we would say that carrying amount is already given to you, 20,48,000. Now we have to compute the value in use on the same date. How will you do that? Annual cash flow from the remaining life of the asset, that will be for 5 years, every year you are going to get cash flow of 5,20,000. So we will be taking n equal to 5, correct? I by y will be the discounting rate, which is given as 15%. Then the PMT will be 5,20,000 every year, and FV will be considered 0 because there is no scrap value. So what we do is we take n equal to 5, I by y equal to 15, PMT equal to 5,20,000, FV equal to 0, and CPT PV, the result that you get will be 17,43,121. Now, recoverable amount will be higher of the following: fair value, that is net of cost to sell, that is 17,38,000 given to you, and the value in use, which we just computed, it is 17,43,121. Higher of these two will become the recoverable amount. So recoverable amount on 31st December 2024 will be 17,43,121. So I'm sure you are clear with these workings. Let me allow you some time to note down these calculations and then we move ahead. Alright friends, once you have completed writing this whole thing, let us move ahead and continue further. As per IAS 36, that is the IFRS numbering, that is International Accounting Standard 36, when the recoverable amount of an asset is less than its carrying amount, the carrying amount of the asset shall be reduced to its recoverable amount. That reduction is an impairment loss. So from the carrying amount of rupees 20,48,000, you subtract the recoverable amount of 17,43,121 and you get the impairment loss on 31/12/2024 as rupees 3,04,879. So please write up these calculations as well and then I take you ahead. Alright friends, once you have completed writing this entire solution, let us move ahead and take up the next question, that is question number 2. Now this is another similar question. I'll give you a couple of minutes to read this question. So as I said, the question is exactly similar with a little bit of difference. This time in this question they have given the scrap value of the asset that is estimated at end of its life of 5 years. That means apart from getting rupees 5,20,000 every year, you will also get rupees 2 lakhs at the end, that is on termination. As a scrap value you will receive rupees 2 lakhs. So this is also part of the future cash flows which will be discounted to its present value to arrive at value in use. Then the estimated selling price on disposal is given, other things remaining same. So more or less that is the additional point given in the question as scrap value. So how will you treat that? You will first write up the carrying amount as given, 20,48,000. Now this time when you are computing the value in use, one change that will happen, instead of putting FV as 0 like earlier in the previous example, you will put FV as 2 lakhs. And when you now compute the present value, what you get is 18,42,556. Compare that with the fair value less cost to sell, which in this example is given as 18,60,000. So between the two, the higher is 18,60,000. That becomes the recoverable amount on 31/12/2024. So please write up this much and then I take you ahead. Alright friends, once you have completed writing this much, let us move ahead and take up the next part of the solution. Impairment loss is carrying amount minus recoverable amount. So carrying amount is 20,48,000, recoverable amount is 18,60,000. Impairment loss on 31st December 2024 will be rupees 1,88,000. Now, one important matter for your understanding. Past couple of questions, when the question did not mention whether it is asking from the viewpoint of US GAAP or IFRS, we preferred IFRS. Many times students ask me a question, a query, a doubt that, sir, why IFRS? Why didn't we take US GAAP? It is because in the previous couple of examples, the case was of an Indian company. And when nothing specified, obviously Indian company will be complying with IFRS. So, if I give you a case of a USA based company, then you have to be very clear whether the question is asking as per IFRS or US GAAP. So, that point you have to consider. And what I am going to do is, I am going to give you a scenario to handle yourself. I'll give you some time to attempt that question, which I'll display over here, and you should be giving your best try to work up the solution. My suggestion is, you don't write the solution in your notebooks first. You just attempt it as a rough work and see whether you are getting the correct answer or not. This is just meant for your practice. So, the moment you get the question, I'll give you exactly around 3 minutes to try it out. Do the rough work, don't write the solution. When I display the solution on screen, that is the time you can write down the entire solution. So, let's move on to the next question, and this is meant for your practice. I'll give you exactly 3 minutes to attempt it, and your time starts now. Let me check whether you have done everything correctly or not. So, carrying amount was given as $720,000. On the same date, when you compute the value in use, the annual cash flow for the remaining 15 years of life is given as $86,000 every year. So, on your financial calculator, you were supposed to take N equal to 15, I by Y as 12, PMT as 86,000 and FV as 12,000 because scrap value was given. When you compute the PV, the resulting PV indicates the value in use, which comes to 587,927, and when you compare that with the fair value less cost to sell, which is given as $600,000, it is definitely higher than the value in use. So, higher of these two will become the recoverable amount on 31/12/2024, that will be $600,000. So, now you can systematically take note of these workings in your notebooks. Let us move ahead and compute the impairment loss, which will be carrying amount minus recoverable amount. Carrying amount was given as $720,000, recoverable amount is $600,000. So, impairment loss on 31/12/2024 will be $120,000. Alright friends, once we have completed this entire solution, let us move on to the next question, that is question number 4. It says, on 1st April 2014, A Limited acquired an asset at cost of rupees 10 lakhs. The asset had estimated life of 10 years. A Limited uses SLM for depreciation. On 31st March 2017, the company had indications of impairment for this asset and a test of impairment was carried out, which revealed the following: recoverable amount rupees 7,20,000 and remaining life 2 years. Determine impairment loss, if any, as per IFRS on 31st March 2017 and also determine the amount of depreciation for the year ended 31st March 2018. Now, another scenario of a company based in India, and obviously they are following IFRS based reporting. Now, important thing over here, they have given you the acquisition cost on 1st April 2014 and the estimated life of the asset was 10 years, the company uses straight line method of depreciation. So annually you will be charging rupees 1 lakh of depreciation, simply 10 lakhs divided by 10 years, 1 lakh every year. Now this is the date given on which the asset was placed for test of impairment, and that is 31st March 2017, 3 years later. So in 3 years you would have charged 3 lakhs of depreciation. So from the original cost, if you subtract 3 lakhs of accumulated depreciation, the resulting carrying amount will be 7 lakhs, and the recoverable amount they have given ready information as 7,20,000. Now carrying amount does not exceed recoverable amount, so asset is definitely not impaired. But as per IFRS, or even the same requirement is under US GAAP, if you are putting any asset for test of impairment and whether the impairment loss arises or not, if the impairment test reveals any change in the accounting estimate, it has to be considered. As a result, 3 years of the asset life has passed and original estimate of life was 10 years. Now it shows that the remaining life is 2 years. As a result, what you are going to do? You are going to depreciate the remainder carrying amount over just 2 years. So your annual depreciation, what you have assessed earlier as per original estimates, and your revised depreciation for the coming year will be different. And because it is a change in accounting estimate, you are not supposed to give any retrospective effect. The changes will be reported prospectively from the date of change. That means nothing has to be reworked for the current year. All your workings will be done from the next year onward. As a result, once you are clear with what you have to do in this solution, let us put up the solution over here. So first thing what you will do is carrying amount on 31/3/2017. I have already explained it to you. You will be charging 3 years depreciation, and that will be computed as 1 lakh every year. For 3 years it will be 3 lakhs. So on 31st March 2017, the carrying amount does not exceed the recoverable amount, so no impairment loss arises and the asset is not impaired. Let us move ahead and continue further. As per IAS 36, if there is an indication of impairment, the depreciation or amortization method or the residual value for the asset needs to be reviewed and adjusted in accordance with the standard applicable to the asset, even if no impairment loss is recognized for the asset. Carrying amount after test of impairment is rupees 7 lakhs. Remaining life, which is revised estimate, it is 2 years. So annual depreciation for the year ended 31st March 2018 will be basically 7 lakhs divided in 2 years time. So annual depreciation as per straight line method as revised will be rupees 3,50,000 per annum. Now what I want you all to do, I am going to give you another assignment. I will display a question over here on screen and you are supposed to try it out. That question will target the computation of impairment loss from the viewpoint of IFRS as well as US GAAP. Now US GAAP part I will do it for you because all these questions what we have attempted are done from the angle of IFRS only. So for you, IFRS has now come into a line where you can attempt things on your own. The US GAAP treatment I will discuss with you. So when I display the question, I am not even going to read the question. You will read it and I will give you reasonable time to attempt the calculations. And as earlier, you are not supposed to write the solution when you are trying it out. Just make a rough working and keep the calculations ready as per IFRS. Then I will display the solution, then you can note down the solution. You can just give me the feedback whether your calculations were correct or not. And when it comes to the application of US GAAP in that scenario, that is the point which I will explain to you and then you will attempt it. So let's begin with that question, and that will be question number 5. I want you to focus on the later lines over here. It says you are required to determine the amount of impairment loss, if any, as on 31st December 2024 as per IFRS and as per US GAAP. So this US GAAP part right now you don't have to attempt, just try out the IFRS part. So let us check your IFRS part of solution. So impairment of assets under IFRS. What you would have done, carrying amount is given as $520,000, value in use of the asset on that date. You will compute considering the annual cash flows for the next 8 years as $58,000 every year. You will take n equal to 8, I by y equal to 12, PMT equal to 58,000, and the scrap value given as $16,000 will be taken as FV. And when you make CPT PV, you get the present value which will be identified as value in use, and that comes to $294,585. Recoverable amount will be higher of the two, that is the fair value net of cost to sell, that is $510,000, compared with the value in use as determined above, and whichever is higher will be identified as recoverable amount. So in our case it will be $510,000. Let us move ahead and write up further. Impairment loss as per IFRS, it will be simply carrying amount minus recoverable amount. Carrying amount is given to you, recoverable amount you have just determined, impairment loss will be $10,000. Let us move ahead and now deal with impairment of assets under US GAAP. Now for you to recollect, how do you apply US GAAP when it comes to impairment of assets? Now what is different under US GAAP? Theoretically we have learnt in the previous class. Let me remind you. You are going to consider the undiscounted cash flows that you are expecting in future. The undiscounted amount of cash flow will be compared with the carrying amount. If the undiscounted cash flow aggregate including the scrap value, if it is less than the carrying amount, then we say that the asset is impaired. But when you compute the impairment loss, that time it is carrying amount minus fair value. So you be careful in respect of dealing with these calculations, and let me guide you over here what you need to do. You will take recoverable amount as per US GAAP, which will be sum of the undiscounted cash flows including the scrap value. So every year for the next 8 years you are going to get cash flow of $58,000 every year. So 58,000 multiplied by 8 years. On top of that you will be getting $16,000 as scrap value. So the aggregate of undiscounted cash flow is coming to $480,000, and the carrying amount exceeds this recoverable amount. That means the asset is impaired. And how do you compute the impairment loss? It will be carrying amount minus fair value. Carrying amount is $520,000 and fair value is $510,000. So impairment loss will be just $10,000. And don't forget, this is the impairment loss as per US GAAP. So I'm placing that heading over here, impairment loss as per US GAAP, and that is $10,000. In this case, coincidentally, the impairment loss under IFRS and impairment loss under US GAAP both are same, that is $10,000. Important thing over here is this calculation needs to be done in 2 stages when it comes to application of US GAAP. First, you determine whether the asset is impaired or not. For determining whether the asset is impaired or not, you are going to take the undiscounted cash flow aggregate, and if that falls short of the carrying amount, the asset is impaired. Once decided that the asset is impaired, the impairment loss under US GAAP will be computed by taking not carrying amount minus recoverable amount, but carrying amount minus fair value. And fair value, what was given in the question was $510,000. That subtracted, you get the impairment loss of $10,000. So please understand this whole thing and write it down and be very clear in exam whether they are asking the question on the basis of IFRS or US GAAP. So let me give you time to note down this whole thing and then we move ahead. Alright friends, once you have completed this entire solution, let's move on to question number 6. This question again demands determining impairment loss, but both as per IFRS as well as per US GAAP. So this time I am going to give you a little longer time to try out the calculations, because I want you to make the calculations by both the accounting approaches, that is as per IFRS as well as per US GAAP. I will give you 5 minutes to attempt your calculations, and do not write anything in your fair notebook. That I will show you on screen how to write up the solution, but definitely do all the required calculations as clear workings. Let us check your calculations. We first deal with IFRS. Carrying amount is given as $520,000. Value in use you would have definitely computed. That was on the basis of $108,000 every year for 8 years, along with the scrap value of $16,000. You will be getting the present value of these cash flows as $542,967, and recoverable amount will be higher of the fair value net of cost to sell, that is $510,000, and the value in use that came to $542,967. So the recoverable amount is higher of these two. So please write up all these calculations and check and see whether you were correct with these calculations. Alright friends, once you have completed writing these calculations, let us move ahead. And now impairment loss as per IFRS. It is observed that the carrying amount is less than the recoverable amount, therefore no impairment loss arises as the asset is not impaired. So conclusion clearly written for IFRS. Now what about US GAAP? The recoverable amount will be the sum of undiscounted cash flows including the scrap value. So that comes to $108,000 multiplied by 8 years plus the scrap value of $16,000, that comes to $880,000, which is substantially higher than the carrying amount. So as the recoverable amount exceeds the carrying amount, the asset is not impaired. So the correct answer for either part will be, whether it is IFRS or US GAAP, the asset is not impaired and therefore no impairment loss arises at all. I believe you also would have got the same calculations and same conclusions as well. Let us have one more question like this for practicing. Once again, I will give you 5 minutes time to make all your calculations. Let us check your calculations. Impairment of assets under IFRS. You would have started with the carrying amount on 31/12/2024. Then you would have computed the value in use, which comes to $319,423. Recoverable amount will be higher of the fair value net of cost to sell and value in use, because the higher amount is $500,000. The recoverable amount on that date will be $500,000. Let us move ahead and continue further. Impairment loss under IFRS. It will simply be carrying amount minus recoverable amount, and that will be $10,000. So don't forget to mention that equation over here. Impairment loss under IFRS is carrying amount minus recoverable amount. Now what about US GAAP? Sum of undiscounted cash flows including the scrap value will result into the recoverable amount, and that is coming to $520,000, whereas the carrying amount is $510,000. So as the recoverable amount exceeds the carrying amount, the asset is not impaired. So the impairment loss arising under IFRS, it is $10,000, and as per US GAAP the asset is not impaired. So please take note of all these calculations, and with that we put an end to this session.